Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 29th of January and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 5, season 8 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed. Now, Phil, it's been a busier than normal week for us on,
yes.
on the podcast, hasn't it? Because we've recorded 2 special interviews. First up was with Cap HPI's Derren Martin talking about January's used car values, and that's actually available on your podcast feed right now, and we'll have an extract of that on today's show. But we also did another one, didn't we?
We did, yeah. We've got one that will be due to publish this week coming. So on Wednesday morning, we've got Steve Young, who you might remember he's been on the podcast before from ICDP. He's the MD of ICDP and very much an industry guru. So he'll be talking about all his latest research on the after-sales market trends in the franchise and independent sector. So again, we'll have a little snippet of share just what to expect from that. But do look out on the social channels for that on Wednesday when that becomes published. But that is a very interesting one because it gets a little bit thought-provoking of what the impact is going to be in the franchise and independent dealer as we move forward with everything that's going on.
Yeah, it really is a big picture view of after-sales trends at the moment and sort of going forward to 2030. So there's lots and lots of trends that he's identifying and looking at the moment. So another shout out this morning, that's for our good friend of the podcast, David Billsborough of Cheshire Cars. And he's come up with a new tagline for us because he shared our post last week, and he described us as being the daddy of all motor trade podcasts. So many thanks for that, David.
Yeah.
And hope you're enjoying the show this morning.
Yeah. So look, I mean, again, as always, we're going to share the interview. Part of the interview there with Derren Martin, who's Curtis says is going to be talking through everything about the market in January and what to look forward to, and we do ask him about what's happening with the Vauxhall Zafira values as well. So look out for that. Stay tuned. That'll be coming up shortly. But in the meantime, if you do want to get in touch with us, then do. Send us a note through any of the social channels, LinkedIn to either myself or Curtis through there on LinkedIn, or you can email us through motortraderadio@yahoo.com. So if you've got any press releases you want to share with us, any exclusive insight you want to share with us, or you want to come onto the podcast, then please do feel free to get in touch. So just a quick one, Curtis. So what have we got? We've kept the headlines fairly brief, and if you're not know, that was January, by the way. So January is now at the end of January, just in case anybody missed it. But what headlines have we got for this week, Curtis?
Okay, so headlines today are from Motor Trader, Car Dealer, Sunday Times, Auto Car Business and Motor Trade News, starting with sales of EVs across Europe to overtake diesel this year. Cazoo's share price has fallen to less than half of what it was at initial valuation just 5 months ago. The SMMT is forecasting a recovery in UK car production after what it described as a dismal 2021. CarShop has plans to open a new car supermarket in Stoke-on-Trent. And finally this week, small dealers can also be digital disruptors, says iVendi. But we're going to start this week's show with an extract from our chat with Cap HPI's Director of Valuations, Derren Martin, talking about January's used car values. Now, for the sake of listeners, just to recap, we had 8 months of consecutive price rises from March all the way through to October last year, followed by a dip of 1.2% in November and then 1.4% in December, with prices closing the year at a record-breaking high of 22%. So can you bring us up to date with the headline figure for January and also set the scene in terms of what dealers dealers were telling you about January stock levels and demand.
Yeah, thanks. We saw some drops in November and December, and we put that down at the time to seasonality. It happens every year, but after such an unusual year and stock shortages, I think there was maybe a little bit of a question about whether it would happen again, but it obviously did. We then, as we've gone into January, I would say it's been probably a quieter than normal start to the year for, especially over that Christmas period between Christmas and New Year, and then that short first week back. And I think there was a little bit of concern amongst retailers that it wasn't going to be an uplifting January. But since then, we've seen the situation improve, not dramatically improve, but steadily improve. Retail demand seems pretty good. Has been getting better, as I say, through the month. And in the early days of the month, we saw values dropping, but we've started to see them recovering to a degree now. But I would say it's very, very mixed out there, really. So the average movement of live values during January at 3 years, at a 3 year point, has actually been a zero movement. So that's the average. But if you look at all of the moving parts within that, there's been models that have gone down in value, examples being sort of the Audi Q5, BMW X1, Jaguar E and F-Pace, Grandland X, Qashqai, and then you've got models that have gone up in value, Touareg, T-Cross, Mocha, Crossland X, vehicles like that. So it's been really interesting to see all the moving parts within, and there's also been differences by age as well, with older cars going up in value, at almost 3% at 10 years, but at younger ages a very, very slight movement down. So the zero at 3 years doesn't really paint the whole picture.
And as you say, so it's 0% over the course of January, and I was interested in what you were saying there about going into January. It was a slow start. We had that short week. What was the reaction from dealers in terms of the pricing as they went into January? Did they hold firm? Was there any fluctuations?
Again, it was a bit mixed, and there were sales that we weren't used to seeing over the last few months. So there were a few sales springing up. I think some retailers were probably a little bit concerned that they'd stocked up at high prices in sort of September, October time, and when demand didn't come quickly, then there was probably some adjustment of prices. Margins are still very high, which is obviously good for the dealers, but there has been some adjusting of prices down. Some cars just look quite expensive, and obviously the ones that have just been a bit sticky and have probably been in stock for longer than hoped for. So it's not been across the board, these price realignments, and some dealers have really held their nerve, but there has been some that have reduced prices of some, but it's been more selective than across the board. And we've seen sales, as I say, with some doing sort of sticker prices reduced, some doing an over and allowance on a part exchange, some doing sort of after sales like service packages. So there's been quite a few ways of stimulating demand.
And Derren, I mean, you've mentioned there in terms of some of the differences around the age segments and vehicle types in terms of performance over the month, and I think you're right. I think, like you say, that level 3 year 60 at zero movement, there's a lot going on behind that sort of average of a lot of averages, isn't there? As we always try and point out, that the devil's in the detail. And I suppose the first thing is, it's still a good time to be buying or selling a Zafira, as everybody keeps referring to Zafira as the key car.
I was looking at the data actually on Zafira and Zafira. So looking at the last 12 months. So the last 12 months obviously now starts in February, March time of last year. They were actually dropping before that. Ever since then, they've gone up pretty much every month. Zafiras, they're now about 75% up over that 12-month period, because we've knocked off the months where they were dropping previously. Now, when you're looking at 12 months, they're actually the second highest in percentage terms. I think it's the Toyota Auris hybrid that has gone up by the most.
So as always, very insightful there from Derren, and that is just a small extract from the the earlier podcast we did with Derren earlier on in the week, and as Curtis said right at the start of the show, that is still available on your podcast download feed. So do check that out. And very, for today, in terms of what's happening with the marketplace, we're at the end of the first month of the year. He does share his views of where those valuations are expecting to head and some of the reasons why, which obviously much of the sector is talking about now as we move through the year and what's been happening in the used vehicle value market. But we're going to head off for now to the first story of today, and that is, as Curtis said there, over at motortrader.com, and sales of EVs across Europe to overtake diesel this year. So this is insight coming over from the Jato Dynamics global analyst there. So they're saying that the EV market share is going to take over diesel across Europe for the first time this year.
Yeah, the data has revealed that in 2021 the industry registered 2.25 million EVs, which made up 19% of the market. And while diesels accounted for 21.7% of the market, Jato is saying it's likely they will be outsold by EVs this year. And that's helped by better supply of electric vehicles and also generous incentives from OEMs, say Jato. And it's worth putting this into a bit of context because, as we know, we reported this a couple of weeks ago, that within the UK new car market, battery electric vehicles outsold diesels in 2021 for the first time, and that was 11.6% market share versus 8.2% for diesels. So diesels were down from 16 to 8% last year. And also within this report, Jatos say that the semiconductor shortage had actually caused more damage to sales overall than the COVID lockdowns, which I thought was an interesting observation there.
Yeah, I think that's probably the case, isn't it? I think, the COVID lockdowns, okay, if the customer's in the market for buying a car, they may be locked down for a period of time or you can't get access to purchase that vehicle, but they're still in the market for a car and they'll come out again. And like you say, if the semiconductors, if the car's just not available, then it's not available or it's got a long lead time. So I think, they do make a point of obviously, that impact, and the crisis after crisis had a negative impact on demand and registrations in the market there. So, and they still talk about the ongoing uncertainty of the COVID pandemic alongside the prolonged semiconductor shortage has created obviously a storm for the OEMs last year. So very insightful piece there. So we would urge you to go over to motortrader.com and check that out, because they do show a little bit of insight around the despite the advances coming from Tesla, BMW Group and Volkswagen, they're already they've been able to gain traction over the last 2 years, but overall volumes are down. So it's going to be an interesting one as we move forward.
Yeah, and also worth just adding that the upturn in battery electric vehicles across Europe last year was also helped by manufacturers switching capacity to EV production away from petrol and diesel, because they're trying to get their overall fleet CO2 emissions down. So that was also a contributory factor. Yeah,
and I think it's clear. I think we're talking about market share of electric vehicle or alternative fuel versus petrol, diesel, but we know that new vehicle market in terms of supply, we know the manufacturers are transitioning to electrification. As Carlos from Stellantis might say, politically rather than demand, but it doesn't matter. We are moving to EV, aren't we? So we're going to see a lot more of this in terms of market share of electric. It's going to be a case of making sure that the infrastructure is in place to keep that going as those vehicles enter the market. So I'm sure that we'll be talking about EV much more over this year.
You think so?
Yes.
Just a little.
Just a little. And talking about people a lot more. We're heading over to car dealer now, and this is a great story. This, because they have referenced some of the source of this, haven't they, Curtis? I think there's a bit stripped out. Was it the Sunday Times? Was it or?
Yeah, it's an interesting take on a story that ran in the Sunday Times last weekend. So I think Car Dealer ran this possibly on Monday, and the headline is Cazoo's share price has fallen to less than half of what it was at initial valuation. That was just 5 months ago. So the piece from Car Dealer says that Cazoo's shares have crashed to less than half of their initial price. So the online car retailer floated on the New York Stock Exchange, you may recall, in late August last year, and that was via this special purpose acquisition company, or SPAC, and we did go into the details at the time on the podcast. We explained what that was. It's rather complicated, and if you want more details on this, the Sunday Times story does actually go into more detail. But the launch price was $10 a share, so that's around £7.40, which valued the company at $7 billion, so that's around £5.2 billion. However, they're now trading at less than half of that, so that's just $4.15 a share, that's £3.06, pulling the valuation overall down to $3.12 billion. So that's just £2.3 billion.
Yeah, and like you say, I think the Sunday Times are very much looking at it from a shareholder investor perspective, and obviously car dealers trying to look at it from a dealer perspective as well, in terms of what's been happening with those valuations. And we know that we know what went on right at the start when Cazoo floated, and there's very much opinions out there in the market, isn't there, as we certainly well know. But it's going to be interesting to watch this, because I think also this week Cazoo have announced further acquisitions in the European market as well, and they've made 1 or 2 acquisitions across Europe in recent months. So you can see that they are starting to expand their proposition across Europe. So we'll keep a close eye on this one as it starts to develop. And remaining with what's happening in the market, and this is coming from Autocar this time. So this is about production, and we were just talking about Jato and the impact of semiconductor supply, etc., particularly across Europe. But in Autocar, they're talking about the SMMT forecast UK car production recovery after dismal 2021. And they're saying that the chip and staff shortages made output drop to the lowest level since 1956. But the situation looks set to improve throughout 2022. So I think there's a view here that obviously we've had the impact of shortages of material, be it semiconductors or other materials, and we know that not just the UK, not just Europe, but the global automotive sector has been hit at various different stages around the lockdowns of the pandemic and challenges facing in that sector. But the SMMT do reveal that 859,575 cars came from the UK factories last year. They talk about a dismal performance that equates to a 6.7% decline from 2020 and a 34% on the pre-pandemic levels of 2019. So what's your thoughts on this one, Curtis?
It's an interesting story, and I'm actually a bit of a convert to Autocar Business. I can really recommend them as a news source, because they're putting out some really good stories at the moment, and they've got some good writers on them. So very much sort of business-orientated stories for dealers and the industry. So this particular piece, it does go into how the chip shortage, also staff shortages due to COVID self-isolating rules and enforced showroom closures, really this time last year pulled down domestic demand during the first quarter, and that had a big impact. And I was interested in one of the figures you quoted there, Phil. What we saw last year was actually a 34% drop on those pre-pandemic levels. So it just shows where the sector is at the moment. Now, how it recovers remains to be seen, because of course we don't have Honda Swindon, so there's a fair chunk of production that's gone out of the sector. But the piece does actually point to some positive noises coming from the SMMT, especially around EV production with the Nissan Leaf and Mini Electric, both produced in the UK, and these are areas of growth. So Mike Hawes, Chief Exec of the SMMT, anticipates that while the semiconductor issue is going to be tough in the first half of the year, it will ease, and that should flow through to production output. So some positive signalling there, certainly the most positive signalling I've seen yet about whether or not, or how much light there is at the end of the tunnel with the semiconductor shortage.
Yeah, and I think we touched on the other week around that British Vault and investment potential down in Coventry. There, the do site in terms of this new battery factory at Coventry Airport and other areas of investment that could actually increase and the production capacity for the UK, be it export or not, but actually that production as an opportunity to increase, and depending on obviously what happens with some of those manufacturers in the UK relative to their global demand. So positive story there from the SMMT on their outlook towards productivity.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. And now, here's a little teaser from our chat with ICDP MD and industry guru Steve Young, talking about some of the after-sales trends that he's identifying.
And in this, you make a point around we talk about the added complexity in all of this, and is boosting obviously the cost of repairs. Is this going to have a positive or negative benefit in terms of higher invoice prices or values for the dealers and garages in doing these repair costs?
It's a good point, and in terms of value, we do see that the value of the market is likely to at least be probably stable rather than increasing, but it won't suffer the same decline as the number of operations. But within that, you've got sort of a big number that's missing, which is obviously the oil and the oil profit, and then you've got an increase in the value of the parts that are being used, particularly on anything that's got a sensor attached to it, and also more complex materials and so on. So that's going to tend to favour the OE parts business and the manufacturers and their distribution channels. The reduction in the lube profits obviously affects everyone, and that's something that's much more under the dealer or the repairer control.
Again, as Curtis pointed out there, that's a very small snippet from what to expect from Steve Young. Very considered answers there, very insightful, and if you ever watch anything that Steve Young puts out into the social space, he's looking at a lot of information, a lot of data, a lot of insight coming out from Steve. So do tune in for that when it's available this week. Watch the social feeds. It should be out on Wednesday at 9 o'clock. But like I say, you'll see that come through your social feeds. So moving.
And it's worth adding, Phil, that that's actually the first in what will be a regular series of chats with Steve. As you say, he does have a lot of sight across the industry. So what we'll do each month is just focus on one particular aspect and what that means to dealers. So he's got off to a good start with after sales.
He has, and we'll cite it next week. But he's also a contributor in the Autofocus, the quarterly report that I produce as well now. So he's a busy boy for us at the minute. So thank you for that, Steve. And so heading over here in terms of CarShop plans major car supermarket in Stoke-on-Trent, and this is over at Motor Trade. And now we know that CarShop have expanded into, and I say my territory, I mean Stoke's fairly northern for you as well, isn't it, Curtis, to be fair? But
it's far north.
It is, yeah. I mean, so they have, opened up a site over in Halifax, which is more my area, which they do talk about in the story, saying that in November of last year it opened the CarShop Express in Halifax there. But again, showing the planning growth for CarShop in this sector, and that the story is that the planning application to Stoke-on-Trent City Council is in the pipeline. It's been in there since 2020, but they are moving forward with this, and they're looking at after-sales and MOT testing facilities as well.
Yeah, it's a sizable facility, so it's just under 7 acres, and this will be the 16th CarShop supermarket, and it follows a flurry of openings. So, over recent times we've seen supermarkets opening from CarShop in Leicester and Leighton Buzzard, as well as the one you mentioned in Halifax as recently as last November. And also worth adding that CarShop, obviously owned by Sytner, is the second biggest supermarket in the Motor Trader top 50, and that's behind Motorpoint. So it really is going from strength to strength, especially with this latest opening. Definitely.
I think it's becoming a very busy space, isn't it? Those supermarkets, but they did share their intention for growth, and certainly they've accelerated. I think the pandemic did slow that down. I know they were talking about it pre-pandemic, but they've certainly come out of the blocks at a very quick pace, haven't they?
Yes, yeah, and we've got a nice upbeat story on which to end on this week. It comes from Motor Trade News, and the brief headline is "Dealers Can Be Disruptors Too." So this is all based on some comments from Darren Sinclair, who's the new Chief Commercial Officer with iVendi, and he's basically saying that technology is easily available to all to create a service offering that matches even what the largest, best funded new entrants are doing to disrupt the UK market. So he goes on to say one of the key messages from iVendi to the dealer sector this year is that you can be a disruptor and offer everything that we are seeing from extremely well-funded, high-profile newcomers. Wonder who he's talking about there. but he does go on to say that creating a comprehensive online journey, including elements such as integrated motor finance, part exchanges and delivery, is something that's easily achievable and cost effective for all car, van and motorcycle dealers. And this is this sort of resonates with some of the interviews that we've done over recent months with some of the smaller independent dealers who are very much switched on to online marketing and taking orders and selling cars over the internet. It's not the preserve of the big players and the disruptors.
No, and it makes a very clear, valid point there, because at the end of the day, these operators in today's market, they've already got the facilities. They don't need the investment. They've already invested, haven't they, over the years? So, it's just a case of evolving, using the technology that's available to them, and challenging it and going up against some of the guys that are entering the sector. And I know from my conversations across the market, many are doing that. You and I have interviewed people like Robert Forrester from Virtue and Dash Gupta from Marshalls, who, they haven't slowed down, have they? They've not sat back, put their feet up and thought, well, we can't do this. They've got up and they've done it. Even David Billsborough, our good old friend David Billsborough, he makes a point of what he's been doing for many years, of the home deliveries and stuff.
From our conversation with David last year, I think he was saying that he sold his first car online. It was 20 odd years ago. When the internet was very, very new. That was early days. So I think the key message here is that don't be put off by what the big, well-funded digital disruptors are doing, because a lot of what they're doing isn't actually that new.
Definitely. So we've kept the headlines fairly brief this week because we wanted to get as much of the Derren Martin interview as we could, and as I say, that is available on your download feed. It was published this week. So check that out for the full interview, and do tune in this week coming for Steve Young, who will be a regular contributor now and giving his view of the marketplace, and he has some significant members of the ICDP there, so I'm sure we'll increase his thoughts on what's happening in the market there. But again, do check out all the platforms that we've mentioned today: Auto Car Business, Motor Trader, Car Dealer, etc., and all the normal trade medias. There's a lot of stories, a lot of activity taking place, so do check that out, and we will be a lot more busy next week. I think we've got Steve back on from Enable next week as well, so I'm sure he's got a lot to say in what he's been up to in the month of January.
Yes, but that's all for this week. So as Phil says, do check out our interview with Derren Martin, and do look out for our after-sales chat with Steve Young on Wednesday. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chat that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.